It's been another great week for the Wallstreet Bets crew as price has surged roughly 40% or so just this week alone and is up as high as 400% since mid-July. Now the bag holders of Tupperware got some additional great news, and that was Tupperware restructuring their debt. Going to the daily chart, we can see the stock gapped higher. It is selling off at the moment, but why is it gapping higher? Company finalized a debt structure restructuring deal, which it expects will help to reduce or reallocate about 150 million of cash, interest, and fees. The deal would also give Tupperware immediate access to a revolving borrowing capacity of about $21 million. Now, for details, let's get into this article before we continue with the analysis. This is coming from Yahoo Finance by way of Reuters. Meme stock Tupperware jumps as debt restructuring deal fires up retail army. So the stock, like I said, is up 55%, but it is selling off. The Florida-based firm is making an attempt to turn around its business after raising doubt in April about its ability to continue as a going concern as it struggles with slumping sales. Tupperware said on Thursday it has struck an agreement with its lenders, which will help reduce or reallocate 150 million in cash and fees, and would give it immediate access to revolving borrowing capacity of about 21 million. After a surge in demand for Tupperware containers to store food during the lockdown, the company has witnessed a slide in sales volumes since 2022. Widely recognized for its bright-colored plastic airtight containers, the company has recently caught retail traders' attention, which has helped to drive a more than 450% surge over the past 3 weeks. Now, analytics firm Ortex estimates 31% of Tupperware's publicly available shares were short. That's pretty high. Bearish investors, the short sellers, have lost roughly 33 million on paper in the last 3 weeks. Now, on paper, so they're still in. They haven't gotten out yet, but some have gotten out, and as a result, they have to buy back their shares, which is also helping Wallstreet Bets push up the price. Now, this is interesting, which I didn't know. Tupperware was the second most actively traded single stock by retail investors over the past week. Typically, it's been Tesla. Tesla's always ranked number one among retail investors. All right, so why are we selling off today? Well, number one, we had a great week. And typically, after the end of the week, you want to take some profits off the table. So that's number one. Number two, you can see price has hit this support resistance band at 550. It was support, now serving as resistance. And number three, for those who, well, in this case, whoever bought here is losing cash right now. But the big driver is it's the end of the week. You have some profit taken. From a technical standpoint, you have price hitting this resistance support band at 550. But the good news is that price is now definitively above the 200-day moving average, and that's going to serve as dynamic support. You also have the moving averages starting to point up, which would also serve as confluence with this 200-day moving average. But overall, a great week for the bulls, a not so great week for the bears. And being that the article mentioned that the shorts are about 33 million in losses on paper, means that they haven't gotten out of the position, which means that they still think that Tupperware is going to decline. But that's not if the Wall Street Bets have anything to say with that. Thanks for watching. Subscribe. Please like the video.